Hey everyone, welcome to your Algo Lab. In our last episode, we explored the 3-month TRIX strategy on global equity indices. If you haven't watched it yet, we highly recommend checking it out. The links to the previous episodes are in the description below. Today, we'll delve deeper into some optimization techniques. There are many advanced optimization techniques available. In this episode, we'll use one called grid search. As the name suggests, grid search is an exhaustive search technique used to systematically tune the parameters of a strategy. To illustrate, let's suppose we have a strategy with 2 parameters. We define our evaluation metric, which could be return, risk-adjusted return, or any other metric. In this example, let's suppose that we have the risk-adjusted return, where a higher value is better. We observe that the combination of parameters 3 and 30 yields the best result. Ideally, we aim for a pattern where the optimal combination is located within a zone of stability. This is important because we want our best parameter set to be robust, meaning that small changes in the parameters should still result in good performance. Returning to our TRIX strategy, we have already implemented our benchmark buy and hold strategy and the 3-month TRIX strategy. Here we focus on their annualized returns, highlighting where our strategy outperformed the benchmark for clarity. For our TRIX strategy, we have only one parameter to consider, the TRIX exponential smoothing window. Instead of using a grid with multiple rows and columns, we will concentrate on a single row, testing both shorter and longer time frames. In terms of grid search, we'll select a few specific time frames rather than conducting an exhaustive search. For long-term strategies, our objective is to find commonalities between similar assets rather than pinpointing a specific parameter to maximize individual risk-adjusted returns. We use different back-testing methods for short-term and medium-term strategies, which we will discuss in future episodes. We'll select one parameter, 2-month, which are below the 3-month TRIX, and 3 parameters, 4, 5, and 6, which are above it. We'll run the complete program using these parameters and evaluate the results based on absolute return, maximum drawdown, and risk-adjusted return. Let's begin by examining the returns. We observe that average returns fall below the benchmark buy and hold strategy. In terms of the number of outperformances, 20% of the monthly resampled TRIX outperformed the benchmark. When considering risk or maximum drawdown, 99% of the TRIX strategies outperform the benchmark. Now we present the risk-adjusted return calculated as the annualized absolute return divided by the maximum drawdown. Here we observe that all the average TRIX strategies exhibit a better risk-adjusted profile compared to the benchmark. In terms of the number of outperformances, the monthly resampled TRIX shows a 63% outperformance rate. Let's examine some of the top performing strategies in terms of risk-adjusted return, beginning with the 3-month TRIX on the S&P 500 index. This strategy effectively captured significant uptrends. While it did generate some false signals, these were fewer compared to other strategies. Notably, the strategy did well at avoiding large drawdowns, particularly during major events like the dot-com bubble and the 2008 financial crisis. Now let's take a closer look at one of the poorest performing strategies, the 6-month TRIX on the FTSE MIB. This strategy generated losses primarily because the signal period was too long, making it slow to adapt to changing trends. Additionally, the FTSE MIB has mostly remained in a trendless state since 2009, further contributing to the strategy's underperformance. To wrap it up, today we ran a grid search on our long-term resampled TRIX strategies across all global equity indices. While the strategy didn't enhance absolute returns, it did improve risk-adjusted returns. In the next episode, we will backtest the moving average crossover strategy on other asset classes, including fixed income, commodities, currencies, and cryptos. Be sure to check out our other videos. If you're enjoying the content, don't forget to like, subscribe, and hit the bell icon so you never miss an update. Thanks for watching, and I'll see you in the next one.